An investment in this fund would have multiplied 400 times. The starting NAV of this fund at the time of the launch was 10 rupees. Now the NAV is 4,000. Seriously, if you had invested 10,000 rupees in this fund when it was launched, it would have multiplied your investment by 400 times. That is, the current value of your investment would be 40 lakhs. If you had invested 1 lakh, it would have become 4 crores. But 1 lakh would have been an outlier. Not everyone would have been able to invest 1 lakh. Even 10,000 was a large amount then. The year we are talking about is 1995. This fund was launched in October 1995. What is the annualized return that this fund has generated? If you use a calculator to find out the CAGR, input starting value as 10,000 and final value as 40 lakhs. Number of years is 29 years. The annual growth of this fund works to about 23%. That's an annualized return. How many investors would have actually benefited from this or really got this kind of a return? Only a handful, about 2,000 investors in all, are the only ones who have stayed in this fund during the entire course of 29 years. There are 3 reasons why only a handful of them have been able to benefit from this. The first reason is the moment one sees some amount of money accrue in such a liquid asset, they are tempted to sell them easily. They use it mostly for emergency purpose. Now, if you have a house, do you sell it because you have an emergency? Or your house gold, do you sell it when you have an emergency? Rarely. This leads to an important topic, why investors are unable to stay invested for a long time in equity assets and enjoy the real wealth creation. It is called the belief in the asset class. Most of us Indians have inert belief in real estate as an asset class. So, we will not trade that easily. We will not sell it easily. However, equity as an asset class, there are very few who believe in this asset class. Most people behave like traders. They want to buy and sell often a tradable item, trying to make quick money. Investors starts believing long term, but eventually get capitulated. They end up selling the mutual funds, making meager profits to buy a plot or a financial emergency. The real reason actually is lack of faith in equity as an asset class. The second reason is that it is easy to sell and encash just by a click of a button. Unlike real estate, which is much harder to sell, is far more complex. This explains why not many people are able to experience the power of compounding in equity asset class, and wealth creation is mostly on paper or notional. The third reason, it is not easy to see your investments lose value. Equity returns are not linear. It goes through deep corrections from time to time and volatile asset class. Some of those losses are to the extent of 50%, sometimes 20%, sometimes 30%. Imagine investing a lakh and seeing the value go down to 50,000 rupees. In equity, it is not a linear growth in the fund value. This continuous ups and downs takes toll on emotional capacity to stick around with the fund. So many end up selling, fearing further downturn. Only if you had the courage to hold on, it has come back every single time and went on to scale new highs. But the time in between, when the NAV turns negative, most investors capitulate at this time and sell and exit. Now, if someone invests at 4,000 rupees NAV and let's say over time it goes to 5,000, the investor would be making a 25% return. But imagine the person who invested first at 10 rupees NAV. When it moves from 4,000 to 5,000, he's actually multiplying his investment by another 100 times. So this is a 100-bagger return for him. That's the power of compounding. So if you hold on long enough, the magic starts to appear in compounding. To stay committed to investing, it's crucial to have a mental accounting strategy. There are various methods to achieve this, and in these videos, I have discussed 1 or 2 approaches involving doubling your investments in 10 rupees NAV NFOs. Watch this video and choose a framework that aligns with your personal strategy. Here is one more about tripling your money strategy. How can you turn 1 lakh into 3 lakh? Or how long does it take to triple your money? What's your goal for achieving financial freedom? If your target is 3 crores, how long will it take to create the first crore through a monthly SIP investment and then triple it? Understanding these frameworks can help you create a solid investment plan. In this research, you can see that in Indian equity, 80% of the time you have tripled your money in 10 to 11 years. For example, to create a 3 crore corpus, you can first aim to create 1 crore by investing 18,000 per month in a SIP mode for 16 years. Then, this 1 crore would likely triple in the next 11 years. Essentially, you're creating 3 crores by investing just 18,000 per month for 16 years. For a customized calculator and for investing based on your risk profile, life stages, goals, please register here or email here. If you prefer content like this, please like this video and share it with your friends and subscribe to this channel.